All right, good afternoon, everybody. Event Trader back with you, and we are being joined for the Options Playbook by none other than Brandon Mars, of course, Options Trader himself. So, Brandon, I know we are just talking a bit about it. I'm getting an alert here on the S&P futures. The September contract's hitting 44.15 as they get a nice bounce off the 20-day moving average, but some whippy price action early on, my friend. So I'd be curious as to get your take over market commentary. I know it's been about 2 weeks since we last talked, so obviously we've had a little bit of a pullback here and then this whippy price action. So from your experience, what do you think we're looking at right here, and how do you view the markets?
Yeah, it's interesting. We had yesterday big down day to probably scare everybody before the holiday. And gee, look at that. All of a sudden, Tesla up 3%, Nvidia up 2.25. I could keep going, but I think you get the point there. So, some nice returns. I think, maybe yesterday was maybe that final flush before the quarter end, and now we're kind of getting that bounce. But again, from a chart perspective, I was actually just looking at the NQ chart, and you've talked a couple times about that 20-day. We still got some trading left, but you look at that NQ chart on the daily, you got a nice hold of the 20-day. You got a tweezer bottom candle that's right now a Marubozu that's engulfing. I mean, it's like what, three technical things right there just in one candle. So we got a little bit of a pullback here over the last week and a half, and starting to look strong again. So I guess I got to kind of remain in that bullish camp through the end of the quarter.
Yeah, one of the things that I was looking at, there hadn't really been a lot of damage to charts now. The last couple of days, I think, you could start seeing a little bit of the breaking down for sure, which brought us down into that 20-day moving average. But yeah, I mean, from my perspective, it was tough to get overly negative on the market given the upward momentum that we have for so long, and just knowing some of the positioning out there that it had evened out over the last few weeks with some of that buying and the rip that we saw at the beginning of June. But definitely some of that profit taking led to a pullback in some names that people who might have missed it, that want to do a little window dressing, would come into the markets. And we're going to discuss a great strategy for that here in a little bit, but which I know, Brandon, you kind of pointed out as being a perfect conversation piece, and I'd agree with you. But really, you kind of seeing that play out here in terms of, pullback in a key support levels, and now are we getting ready to resume the march? And it'll be something that we'll have to watch because, we got a holiday shortened week next week, so what kind of trading volume do we get over the next couple of sessions, and then of course going into earnings season. So I guess my question for you would be, how closely are you monitoring volume on this, and kind of what's your philosophy with options going into earnings season? I know that you don't, I believe, I don't want to put words in your mouth, that you don't love trading options around earnings just because of the price of the premium there as we get closer to those key dates. But is it something that you look at for a little bit of a further out strategy where, let's just take JP Morgan, for instance, like buying a call early on if you feel that they're going to have a good quarter? Do you ever play things like that? So I'd be curious as to your thoughts.
Yeah, you're right. I barely or rarely trade options the week of or into any sort of earnings report. I personally just got tired of picking the right direction and the stock not moving enough to cover that elevated premium. I think if you do want to play that strategy, I mean, there's certainly money to be made if you have your calendar marked properly and you're looking and you buy a JP Morgan a month in advance. And it gives you some flexibility too, where if you get that run up for 2-3 weeks, you can either just take the position off, or you could roll accordingly. So I think that's a good strategy. It's just not one that I personally employ, but definitely looking out in advance to some of these, I think, is a great strategy if you like playing earnings. That is. As far as the volume goes, yeah, I mean, volume is one of the main things that I look at on a regular basis when I'm making my decisions. I just like to see that volume there for conviction of, how strong the breakout or breakdown is going to be. So yeah, you got to take it with a little bit of a grain of salt that they might be pushing things up here a little bit. I guess the main thing I've tried to tell myself is, even if the volume's light on a week like this, I'm not dumping my 401k into the market right now. I'm looking for some short-term trades. So, I wouldn't necessarily go and like bet against this momentum right now because of the light volume, but it's definitely something that I'm mindful of when looking at my charts.
What's your thoughts on the VIX here? Because obviously we saw a little bit of rolling over. We could point towards the Russia situation. Obviously, the market didn't really react too much to it, but the bottom line is the VIX has remained very low down here, below 14 for the most part over the last couple of weeks, despite some of that selling. When you see something like that, first off, how closely do you use VIX for kind of a broader signal? Being an options trader, my assumption is that you kind of follow it closely just to get a gauge on sentiment out there. But perhaps I'm wrong on that. So, do you got any thoughts on the price action in VIX, and how do you use VIX in your trading?
I used to use it a little bit more. I've probably actually started using it more now just because you guys do a great job on the audio of letting me know what the number is, frankly. So I don't have it sitting in front of me on a regular basis because, again, for me, with some of these trades that I'm doing, like let's look at Tesla. Okay. That was one that I recommended earlier. It's made a nice little run here. It's actually starting to approach 250. I think those options are up almost roughly 50%. So, I'm actually probably going to, I would consider probably getting out of those pretty quick as it starts to approach 250. And this move that we've made is pretty strong. For me, if I'm looking at the Tesla chart and it's strong and I'm seeing the volume and I like the pattern, if the VIX is at 1 or if it's at 50, to me, that doesn't make a huge difference because I'm following that individual price action. So, I'm mindful of it when we reach the extreme levels, and just, maybe some complacency, to not get too ahead of myself. But, for me, I'm watching so many things on an individual basis that I'm not tracking it too much.
Okay. Just keeping a close eye on this. I've seen some people saying that they're having issues with the audio. It seems to be working fine on my end here. I could get any feedback on that just so I could see if that's going to be an issue for the broader audience or if it's just me. I do see that I don't have the charts. So let me grab that. All right, hold on a second, Brandon. All right, that should do it. Okay, so we should be set now. I gotta go find where that audio is so I can turn it off so I don't have a double echo in my voice here, or in my ears. So, okay, Brandon. So you talked a little bit about the Tesla trade here. Um, any further actions? I know you brought the Friday 247.50 calls around 385. Where do you stand with that trade right now?
Yeah, so that's starting to approach that key 250 level. I mean, again, Tesla's probably a name that's going to have, that potential tailwind of quarter end to it. So I'm not sweating it too much. But, with the move that we've had in the market today and approaching the key level, and that option's up about 50%, I might try to see if it does hit 250 and get out of it, and then, potentially revisit tomorrow just to not have to worry about it overnight. If the market hadn't made such a move already today, probably would let that ride a little bit, but just don't want to mess around with the 50% profit after a pretty solid day in the market.
Yeah, no, I hear you. I mean, there's really no need to stick around for too long in any of these names right now, given some of the price action that we're seeing out there. Another one that you had um, on for long here is Adobe, right? ADBE. What's your thoughts on this Adobe trade here? How you're treating that?
Yeah, so Adobe, Jim did a great job earlier talking about the inside bar that was on that chart. So that actually popped onto my radar as I was doing my weekend homework. And I don't know, I can't remember if it showed up on the TA page scans, but it looked like a pretty good long pullback long candidate if you are looking at it on the daily chart. Again, nice move up, a little bit of a consolidation for a couple days, and then you had a real nice bullish candle on Friday, and thought that could have potentially been the bottom. So jumped in that, and yeah, it's made a real nice move here up around that key 490 level. I mean, it's consolidating around that level right now, so it almost looks like it wants to continue higher. And I don't want to jinx that. And after this move in the market, I take that with a little bit of a grain of salt, but it's kind of doing what you want to see from a consolidation standpoint around a key level. I'm looking for hopefully a push. If we got to 495 today, I'd probably get out of that. Again, I started in the 490s and then rolled up to the 500s once those became in the money. Um, so if we got to push to 495 today, I'd probably get out of it completely and then revisit tomorrow. And then, potentially looking for a move up to the 500 level. It's again another stock that's got some potential with the quarter end window dressing. And I like the chart in general. So keeping an eye on 495 today. And, if we don't get there and we don't get any sort of big breakdown this afternoon, I'd probably hold those 500s overnight.
All right. Let's see. Then there's a few others that you have out on your radar here. Let's kind of discuss them mostly on the mega cap tech front. I know you trade a lot of these mega cap tech names. Is one of the primary reasons just because of the volatility and the liquidity?
Yeah, volatility, liquidity, plenty of liquidity on basically the entire option chain. Again, if you're going way out of the money or, several months down the road, you might run into some, less traded strikes here or there. But for the most part, you've got plenty of great liquidity. And, these tech stocks are more day traders. Like I talked about IBM as one today. And IBM is not always the best day trading stock. It's a big blue chip. So, you run into times where it can just be a little tricky on the options front. And you don't get that as much on the big tech stocks, although you're definitely, I'd say, become more prone to the games because you have more options contracts, more retail, institutional market makers. You've just kind of got that smorgasbord of traders that I've talked about before.
Now, we'll go to IBM. This was one of the ones on your list here. This is a name that I like too. I mean, anybody that's looking at the AI themes, IBM should be running just as much as any of these other names with their quantum computing at the forefront of a lot of the AI that's being put into play. I'd be curious, what was it that you liked about IBM that put it on your radar? Obviously, a pretty precipitous decline there over the sessions in front of over the course of the last week and a half. Nice little bounce yesterday and a tough tape, and then you got that extension up into the 200 as you were pointing out in your comment at 8:45 a.m. this morning. What was it that stuck out to you on this IBM chart to put it on your radar?
Yeah, so again, like you said, you got that 5-day pullback after a pretty nice little run, and then the candle yesterday was again a Marubozu candle. For anybody who doesn't know, that's essentially a candle that's, call it, all one color. So you open at the low, and then you basically close at the high. So obviously you have action in between there, but it's basically an entirely, we'll call it 100% bullish or bearish candle. So you have, it can show some strength. Obviously, you start at the bottom at the open, and you work your way up, and you close, right at the top. So something that you always want to see, whether you're looking for breakouts or breakdowns. And then on top of that, it's off by a penny or two, but it's a tweezer bottom candle. So basically what that means is, if a stock like IBM makes a 5-day move down, and then all of a sudden you've got the open of Monday's candle essentially at the same price as the close of Friday's, that is a sign that you have hit the bottom. And I personally love that candle setup. From my studies, I found it to be a pretty reliable indicator of a potential turn. And then on top of that, the candle is a bullish engulfing. So again, you've got three bullish signs just off of your candle. And then, added in, IBM's probably not a bad name for window dressing, again, because it has had a nice run. And then I also wanted to have it on the radar because, again, we're getting that whippy, shifty action, but the Dow was strong yesterday. And if we did get follow through, which we didn't necessarily get today because the NASDAQ took over again, but I figured if the Dow remained strong, if you had all those things on IBM and throw in the fact that it is technically a tech company, you could probably see some tailwinds there. And then the final thing was you kind of almost have that 200-day right where it's sitting right now acting as a magnet. And I just figured, buyers would be drawn into that particular level, and it probably see some additional tailwinds today. And, it's sitting right there at that 200-day. So, I guess let the algo game begin now with that one.
Yeah. All right. So, let's see. What about Meta Platforms? Another one on your
Yeah.
radar here.
So Meta was just one that and Tesla actually. I mean, Meta actually had a down day yesterday, which, I didn't think was allowed in this market environment. And, it was just kind of sitting there, not too far from the 20-day. I just figured that one, if it were to get some follow through downside today, would be a potential bounce candidate on that level. And, again, I guess stocks aren't supposed to go down because it didn't even come close to that today. So I don't even think it broke 280. So I was just looking at that one as a potential bounce because that chart has just been strong. I mean, it's just your classic higher highs and higher lows and got a very nice trend to it. And the 20-day would probably seem like a good area to buy, but I didn't even get there, so never got the chance.
Yeah, it is one of the more amazing charts in terms of just flat out strength. I mean, look at this monthly chart. I mean, I don't think I've ever seen a V-shaped monthly quite like this from Meta Platforms there. Who you got in the cage match between Zuckerberg and Elon?
I really hope that Zuckerberg just kind of knocks out Elon. Elon's a visionary. I like him. I love his energy and entrepreneurship, but I think he just needs a little reality check right now. And I think Zuckerberg's just chomping at the bit to get 3 minutes in the ring with him. So
I mean, he's been training, right? He's like fighting actual jujitsu and stuff like that. So should be an entertaining fight if it does go on. I mean, talk about an instant $1 billion in each of their pockets, probably. But okay, and the last one, Google, but you've got this one actually on the short list. So, what stood out to Google that differentiated itself from some of these other tech plays that you liked from the long side?
So again, I just put this one out there. I didn't touch this one again. You didn't necessarily. Actually, you would have done pretty well on it today because it is flat. But I didn't want to necessarily bet against the overall market momentum. So you find a big tech name that's broken below its 20-day. That's been kind of rare right now. So hasn't held its 20-day. It didn't hold the 120 area, and a lot of the tech names had some pretty ugly candles yesterday with the sell-off, but that one's pretty bearish. And then again, it puts it in that area where it was a couple points away from its 50-day, and when you start to get kind of close to that level, again, it kind of starts to act like a magnet for the stock price. So I figured if the selling did resume today, that would probably be one of the candidates to move down at least a couple points. And, it did. And it actually made a fairly decent little bounce off of the 50-day. And it's actually now reclaimed the close of yesterday. So, This actually now all of a sudden could, I'm not saying run out and do this and need to look at it a little bit more, but, this could now actually be making its bottom after a, 6 or 7 day move higher. So this actually might all of a sudden become a call candidate as I look at it.
All right, we'll keep an eye out on that. Somebody had
And
a
I'm gonna jump in here real quick on one last note on Tesla.
sure.
That is now at like 249 and a quarter, again approaching the 250 level. Those calls that I recommended have moved from about 385 to about 620 right now. So those are up 50%, approaching that key level. And I'll post this to the site here real quick. I'm probably gonna start thinking about taking some profits on that.
All right, so there you go, getting real time trading updates from Brandon on this Tesla. Brandon, real quick too, I'll let you post that. Somebody's asking about the AI chart. So just kind of curious if you had any thoughts on this. It looks a lot like the IBM chart here, broke down, hit the top end of the Bollinger Band around that 48 level back on the 21st of June. It has declined, given up about 30% of its stock price there to drop down to 32. Looking for a little bit of support at 32. So, you got any thoughts on AI's chart here?
Yeah, that does look like the IBM setup, doesn't it? Yeah, I mean that sure looks like it is trying to form a bottom today here, doesn't it?
Yeah,
Yeah, no, I like that. I mean, you've got the move down. One technical setup that I really like is when you get a really strong stock and it has a pullback like that. If it bounces off of the 50 RSI, that can be a really reliable indicator that a trend is going to continue. And it dipped down just below the 50 and looks like it's going to bounce. So that's one that I like. Yeah, no, I like this. And, one would imagine in this environment, a little bit of window dressing after a strong quarter. You want to have those AI names on your fact sheet. You would think that 20-day up around, call it 38, you would
comes
think
into
that
play.
you'd get some sort of, retest of that level potentially through the end of the quarter or the next couple of weeks. So, yeah, I mean, I especially like this if it closes above, 34, which was the open of yesterday, because then you've kind of probably got some of that seller's remorse from yesterday's sell off kicking in to, potentially add a little more fuel to the fire.
Let me ask you one quick question here, Brandon. You've been a big hit with your Friday lottery picks. Uh, got another Friday coming up, and it's quarter end. Does that how did you factor that into your lottery pick thought process? Are you looking for names that you're like people are going to want to show Nvidia in there? Does that factor in at all?
I definitely always have it in the back of my mind, and I actually put this in my notes the other morning. I try to not get too caught up in it because, at the end of the day, if I'm sitting there, everybody wants, and I start thinking mentally, everybody wants to own NVIDIA, everybody wants to. I mean, if I'm wrong, then, if everybody's already piled in and, the fund managers have their allocations to it, then Friday's going to be a flop if I just focus, on that. So I definitely, hey, if I were to look at, Nvidia or Walmart come, Thursday night, I'd probably lean towards picking up some Nvidia calls for that very reason. Another thing, especially too with the long weekend coming up, we'll see how much movement we get on Friday. We might just get some of that choppiness, and people might have, done all of their work at the beginning of the week. So I got to be mindful of that too. But I'd be lying to you if I said on Thursday night when I do my research, I'm not telling myself, some more people want to add NVIDIA at the end of the day.
Yeah, yeah, I agree. All right, Brandon, let's take a look then. I'd love the topic that you came up with for this week because I do think that it fits nicely in, and I'm kind of curious, just kind of bump a few ideas off you for it, and kind of flesh out the conversation around it. But um, what you came up with was a cash secured put. And I think it's a pretty cool strategy that we'll explain to the subs over the next couple minutes here. But why don't you give us your interpretation of a cash secured put, and then we'll go through some examples.
Yeah, so cash secured put, all it is you're writing a put option, and at the same time, you're going to simultaneously set aside enough cash in your account to buy the stock. So basically, your goal there is to actually be assigned the stock and acquire it at a lower price than today. So essentially, this is, we'll call it like a moderately bullish strategy. So, you could say right now would be a perfect example. The market's had a really nice run. You're not really bearish, but you think we're maybe due for a little bit of a pullback and that you might be able to enter into a particular stock at a lower price. So your full on bullish strategy would be to just buy the stock. And then your moderately bullish strategy would be to use, something like this. So basically what you're looking for is you're looking for the price to drop below your strike that you write. And that's how you would be assigned the shares. And then if it does not move, below that, basically what that means is that your put that you write will expire worthless. And then your max profit would be the income that you earned from writing that put, which would enter into your account as you write or open the contract.
So, for instance, just kind of providing a real world example. NVIDIA, obviously a name that everybody wishes that they owned at this point. Probably a lot of people didn't want to pay up for it, given the run that it's had, going from 140 back in October all the way up to the 400 level. So let's just kind of use this. At number one, if you were looking at NVIDIA specifically for this strategy, how would you pick out your strike price for what you'd want to write the call or write the put against here?
Yeah, so NVIDIA, I think, is the perfect example, but also will be the tricky example, if you will, because people are so bullish on it. We've talked about this a couple times today already on the call. I mean, your 20-day moving average would, if we were to have more downside, would probably be a pretty good target. So, that's at 406 and a half. So in the case of NVIDIA, if you wanted to definitely be assigned, you could write the 410 strike. If you really thought that, all of a sudden Armageddon was going to hit quarter ends and all this profit taking was going to kick in, I'd say maybe you dip down to the 405, 400 level. But again, the 20-day seems like a pretty reasonable, target on the downside and where you would find potential support for a stock like NVIDIA.
Does that impact your income if you get it closer to at the money as opposed to out of the money? If
Yes.
you're writing the
So
put.
yeah,
So,
absolutely. So basically, the closer you write your put to the money, the more premium that you're going to collect. And also that would increase your odds of being assigned. So the further out of the money that you go, the less premium you get. But on the flip side, the lower that your stock entry is going to be. So, let's just look real quick here. The NVIDIA 410, and I'll use this Friday. So your 410 is trading at about 340, and your 405 is trading at around 210. So, if you did one contract, you're talking an extra $150 if you did the 405 versus the 410. So you collect more premium, but the odds of NVIDIA dipping down to the 405 level are, it's smaller. Again, that's just how the options and the premiums work. The further out you go, the less likely that something is to happen. So, with the 405, let's just say hypothetically, let's say you really wanted Nvidia stock. And I think if you really just want to get into a stock, this probably isn't the strategy for you. But let's say you're like, all right, let's go down to the 405 because I'm going to use the 20-day. That stock could get down to the 20-day and bounce, and you could never get assigned your shares. So again, it's, the risk return trade-off of which strike that you're ultimately going to pick. Because if a stock got down to 406 and you were in the 405 and you really wanted shares, well, you're probably not going to be overly happy that you didn't pick up those shares. And there's ways to mitigate that, but that's how the basic premise of this strategy works.
It seems like for a strategy like this, it would seem to be more for a swing trader than a day trader. I would think, Brandon, and tell me if I'm wrong in that. My thinking being, if you were looking for a pullback in the stock, and we'll continue with Nvidia. Let's say you happen to be very negative on the markets, right? And you just think that this is all smoke and mirrors, the rally that we've had, that the Fed's tightening is going to cripple the economy, yada, yada, yada. And you think that we could see this pull back to, say, that 360 level, but you think that this will take 2 months to play out or something like that. Does this strategy make more sense for somebody like that, where I know you're not getting as much of a premium with the out of the money writing, but you would be collecting income for a longer time in this process, and then potentially getting filled at a much more favorable strike price? Would you agree with that, or am I off on my thinking?
No, I think you're absolutely spot on. I think it's much better for that. I would say maybe where it would come in for a day trader is if you were thinking really short term. I want to get into Nvidia. I'm going to enter via a cash secured put on a Friday versus just outright buying the shares. And again, you would do that to just earn a little extra income. But yeah, no, I think that this is more of a swing strategy of exactly what you just said. I'm really bearish on the market. I think everybody's going to be all happy during their 4th of July barbecue and talk about, how much money they've made. And they're going to come back on Monday and everybody's just going to dump their shares because they just don't want to be in the market for the rest of the summer. I think that that's more of, your 2-3 week kind of play. So I think you're spot on there.
Yeah, and then you're just collecting that income the entire time, obviously. And the beauty on this strategy, I would think, Brandon, too, is if the options expire worthless, then that's no skin off your nose, right? It would end up being something that you just simply collect the premium on it and then be able to walk away.
Yeah, so you would collect the premium right when you write the contract. So that will be dumped right into your account. And then on the day of expiration, the option contract would just go away if it wasn't in the money. So yeah, you can just, walk away. I mean, the risk there, kind of like I had said before, though, is if you were really interested in potentially acquiring the stock and it didn't hit your price, and it all of a sudden, let's say, took off on you. Let's say Nvidia hit that 20-day again, and then it just had a huge bounce. You might have missed that opportunity. So you're correct; it's no skin off your back, but at the same time, you might have missed your opportunity. And then, like anything with options or any sort of trade, let's say I wrote the 410 Nvidia call, or excuse me, put for this Friday. If all of a sudden that stock, goes up to 420 or it goes to 412, well, I collected my premium, but then it is decision time again. Do I want to just buy the stock? Do I want to, write another put? And kind of like you said, as long as it keeps expiring, I mean, you can kind of just keep doing this over and over and over as long as you have the cash set aside in your account to cover any potential assignments.
Um, and real quick, another session high here as the S&P futures have moved up to 4420. All right, Brandon. So, I mean, right now, I know, and I had never heard of this before until you sent me that email. I've been checking it out, and I guess the one thing that I keep seeing is I'm like, this seems like a no-brainer. Why don't I do this for everything? But I know anytime I start thinking like that, then something's getting ready to hook me in the face in a little bit. So, what's the downside risk to this strategy?
Um, one major risk, and this is very controllable, is make sure that you have enough cash set aside. If you are going to do this strategy, you can't go and I mean, I guess you technically could go and play with the money while you wait for the option to come to fruition, but at the end of the day, you need to make sure that you keep that cash in there. Otherwise, you'd be assigned 100 shares of the stock. And if you didn't have that, then you're starting to talk about, potential margin calls and stuff like that. Just, not a situation that any trader wants to put themselves in. The other risk is really that you don't hit your strike price. If Nvidia, if you do the 405 put and it hits 406, and then on Monday all of a sudden it gaps up to 415, which is not unheard of these days by any means. You've missed your opportunity, and then you're upset that should I go and chase Nvidia? You could end up paying even more for it than the current market price because you did this strategy. And then the other real main risk is if you write the Nvidia 410 put, okay, so that is your assigned strike price. Let's say all of a sudden, Nvidia comes out and they're like, oh, never mind, our chips aren't going to work with any sort of AI. Not that I think we're about to see that, but just for illustration purposes. And all of a sudden, Nvidia plummets down to 400. Well, your strike price is that 410. So that is the price that you're going to pay. And then all of a sudden, when you're assigned your shares, your basis is going to be 410 and the stock price is going to be 400. Now, there are ways to mitigate that. You could adjust your strike by, rolling it down to a lower strike. You can also just buy it back in the market. Now, this would end up creating a loss because you would write it for, let's just use intrinsic value numbers here. So the 410 right now is at 360, $3.60. So if it went down to 400, a 410 would have a minimum of a $10 value per contract. And I'm just strictly using this for illustration. There's more that goes into this, but it would be worth at least its intrinsic value, which would be, 410 minus the $400 stock price. So you could go and buy back that option, but you would have to pay more for it, and that would create a loss for you. So that's really your main risk. I guess at the end of the day, it's never fun to maybe start off your stock ownership like that. But I guess the thing I would kind of go into it mentally with is you're doing this particular strategy because you want to own this stock, presumably for a long-term basis. So, if you got in at 410 and all of a sudden Nvidia for some reason plummeted to 300, well, that wouldn't be very much fun. But if you're talking a couple bucks here, a couple bucks there on a potential long-term holding, not as big of a deal. And again, there's ways to mitigate it, but those are your major risks with this strategy.
All right. Anything else on this strategy that you wanted to mention here, Brandon?
Yeah, I think the main thing, if you do want to write any sort of options, usually you need different levels of approval at the brokers. This has kind of come up before, and I have to plead a little ignorance here because I've done my option approval contracts so long ago that things have changed at the brokers because of this big explosion in the use of options. But I believe that you would need an additional level of approval in order to write any sort of options. So just keep that in mind if you did. It's usually pretty easy to do. But again, if you go to try to do this, you could potentially get rejected. So just an FYI to check with your broker.
All right. Brandon, there's just a few feedback questions that we'll kind of go through. We're not going to be able to get to all of them, but one that we'd been seeing a lot of requests about is this JP Morgan Hedged Equity Fund. The ticker symbol, for anybody curious, J as in Jack, H as in Harry, E as in Elephant, Q as in Qbert, and X as in Xerox. This is a JP Morgan Trust Hedged Equity Fund. Basically, it's designed to provide capital appreciation through a diversified equity portfolio while hedging overall market exposures. So what they're doing in it is investing in a portfolio of US large cap stocks while employing an option strategy that seeks to reduce downside risk in falling markets. Now, there's been a number of questions on this. I was new to it. I believe, Brandon, you said that you hadn't really come across it too much. So I was just kind of curious. I know you took a quick glance at it. Any thoughts on this JHEQX?
Yeah, so that again was pretty new to me. I've heard of it before, and I know that traders definitely talk about the J.P. Morgan rolling of the collar, and it does look like it can potentially move markets. I personally have not paid attention to it a lot. Again, that's kind of I almost feel like it's more of an overall market direction question as opposed to the specifics of the actual options strategy underneath it. Because again, you're basically looking at how much their caller is in the money and basically how they're going to have to adjust their particular caller based upon current prices. So it's almost more of a market direction thing in a way more than the options. So I have not looked at it a ton. The way that I kind of look at some of those things, similar to what I mentioned with the window dressing or, the Friday lotto that you asked me about, I try to not get too caught up on that one particular thing, because then I just get so focused on, well, this needs to happen because of that. And another perfect example would be the pension comment that you made earlier of the quarterly rebalancing. I mean, your quarterly rebalancing does have an effect on the market. And I think you said it was what, 25 billion or something that they have to sell?
26 billion to sell, according to Goldman.
Okay, so I'll just use that example because that one's a little easier than getting into option callers. So if you heard that number today and said, wow, the pension's got to sell $26 billion worth of stock, you would think in theory that you'd maybe want to short the market or buy some
Right.
puts today. And that hasn't panned out. And these days there's just so much underlying the derivatives in the overall market that it's like the quad witching that we talked about. There's $4 trillion worth of options that expire on that one day. And there's a whole bunch of different players and different strategies. And, Goldman Sachs probably has their own callers, or, you and I were talking about that covered call ETF the other day. In a couple of weeks, they've got a massive position on, I think it's on the NASDAQ futures that they might have theirs on. I can't totally remember, but these are billions and billions of dollars of contracts that have to be adjusted. And at the same time, there's players on the other side. So, for me, I just try to really focus on the price action that is in front of me. So I haven't looked at it a whole lot, to be honest with you.
All right. Another question that we've gotten from numerous subs is about the 0 days to expiration option contracts for the SPY. You don't really dabble in that too much, do you?
No, I haven't. Since actually I started with you guys, I kind of started revisiting that. I have, I think now recommended the Qs twice so far. It's something that I'm probably going to start doing, a little bit more. I think there are definitely some times like today it makes a lot of sense. Again, I kind of put those on the back burner for a while. And then when they started doing the 0 day expiration, kind of got a little bit more intrigued. So, as of right now, there's been some pretty good trading on some individual names, and I've just kind of been drawn to those. But I have definitely been looking at those more often these days, and I would expect probably more recommendations from me, over the next couple months.
All right. And then the last question I'll ask you here, Brandon, is I'd be curious as to your take on this XBI, because this is a name that I've been playing around with. It's coming into some pretty key support at the 200-day moving average. Quick heads up to Tesla is hitting that 250 level that Brandon's been talking about throughout this call. So I know you already banked some profits there, Brandon, but if you didn't take advantage of banking the profits with Brandon, now it's at that target that he was talking about earlier. But XBI, Brandon, you got any thoughts on this chart with this Tesla, the 200-day moving average and bottom end of the Bollinger band in play here?
Yeah, and just real quick before I get to that, you mentioned Friday Lottos. I think I'd be pretty intrigued. And again, watch your charts, what's going on there, and a lot can change between now and then. But I think if we got any sort of gap down on Friday morning, I think an interesting lotto would probably be the Friday expiration of either the Qs or the SPYs. In particular, I'd probably say the Qs, just because you're going to find more of your names like the NVIDIAs and the Teslas that people want to show for quarter end. That's something real quick that comes to mind that would probably be very intriguing to me. So we'll see what happens, but you kind of got the wheels turning on that one. So yeah, XBI, for me, when I look at a chart at the end of the day, and again, we've got, hour and a half here, give or take, left of the trading day. So this can very much change, but the XBI on the daily chart, that has at the moment a pretty textbook hammer candle. Right off that Bollinger Band. Looks like it dipped down below the 200-day, which for me says we set a little bit of a bear trap this morning. Now we're going to move our way back up. I would love to see some more volume come in. When I see like a hammer candle like that, I love to see it on high volume, just to show me a little bit more conviction for the buyers that stepped in. And then, again, I talked about this a couple times. If you look at that 50-day moving average on the daily, which is about, call it slightly under 85, which again would be a nice, round, even number, not even, but odd number of, 85, which, attracts buyers and sellers. It really seems like after this move down, you get that nice hammer candle, and then all of a sudden that 85 level seems like it would start to act as a magnet. So again, we'll see how this thing closes, but if I see a chart like that as is right now, that's something that usually goes onto my radar for the next day.
All right. All right, Brett. I think that does it for the primary feedback questions. We'll get around to others as we go along here. But we are going to end the option playbook on those questions. So, in conclusion, then, Brandon, final thoughts on cash secured options or cash secured put option strategies here.
Yeah, I think just the main thing that I could stress is just make sure that you have the money in your account. I went hiking this weekend with a friend of mine, and she's trying to have me teach her options and technical analysis as she gets into the market. And she's like, well, what if I just go ahead and take the money out and I do something else with it? I'm like, well, you're ultimately going to pay the price, and you're going to end up with probably a margin call or the broker stepping in some way, shape, or form. It's not a fun thing to deal with. I've mentioned this before. I mean, I've had inexperienced options traders that were friends of mine, and they've made mistakes like that, and it's cost them very quickly, and it's been very, very painful. So yeah, I would just make sure that if you're going to do it, just make sure that you're watching your cash management in your account to make sure you don't get a Saturday morning call from your broker about not having enough cash.
Never want that Saturday morning call from anybody, let alone a broker on cash, right, Brandon?
Yeah, one of the worst things that happened to me as a new options trader, I've mentioned this before, but I got assigned some JP Morgan calls because I didn't know what I was doing. And I think all of a sudden on Saturday morning, I noticed as I was having my coffee that I owned $250,000 worth of JP Morgan shares. I think
That
I was
coffee
25 years old, and I was like, oh boy.
that coffee got spit up pretty quickly. Hopefully it wasn't in 2007 as well.
I think some Jameson got added to that coffee pretty quickly, actually, is how it really went.
Yeah, yeah, I'm sure. I'm sure that's the only way out. All right. Well, hey, Brandon, it's always a pleasure talking to you and getting your thoughts on the markets and providing some new strategies for the subscribers out there. So, you have a great rest of the afternoon here. We got about an hour and a half left in the trading session, so we'll keep an eye out, see if you pull the trigger on anything. But appreciate the time, and we'll talk to you soon.
All right. Thanks, Gavin. Appreciate it.
No worries. All right, I am just going to go ahead and shut down audio real quick, and I'll be back up with. We'll be posting the taping for this, and getting back to our market coverage here. Just real quick, taking a look. We are near the session highs in the S&P, up around that 4420 level. Best area that we've seen this week so far. You have to go back to last Friday. Last time we were up at 44.20. So we'll be watching that. And also, just quick heads up too, Regeneron Pharmaceuticals halted for pending news. So keep an eye out on REGN. Again, shutting down audio momentarily. I'll be back up in a couple minutes.